In the Australian outback, scrub and red dust stretch as far as the eye can see. It's desolate out here and it's dry. But beneath the dust, there's a bounty that miners are willing to dig a long way for.
How many ounces of gold would be in a typical truck?
So there'd be around 500 grams of gold in a truck.
So we've got a line of trucks slowly making their way out of the pit here. How long does it take to get from the bottom to the top?
Yeah, it's well over an hour.
The Kalgoorlie Super Pit in Western Australia is a sight to behold. More than 600 metres deep, it would cover even Manhattan's tallest skyscrapers. It's so vast, it'd swallow Central Park.
This project's going to be an important one for our business and our shareholders. It's over half.
Stuart Tonkin is CEO of Northern Star, Australia's biggest gold miner.
Probably around $300 to $400 million per annum being spent moving material from the southern part of this pit, gaining access to over 6 million ounces of gold in the bottom of this southern part of this pit.
The price of gold has been on a tear. It's up nearly tenfold since 2000 and more than doubling over the last 5 years. Tonkin's company and many others around Kalgoorlie are cashing in. But the gold industry has been here before.
There's probably more failure stories than success stories where people can point to in the gold sector. And so repairing a lot of that trust with investors as we go into another cycle has been really important for our company, and I think for many Australian companies to get that investor trust.
But before we get to that, let's set the scene. It was 1893 when a group of prospectors on horseback quite literally struck gold in Kalgoorlie. A rush ensued and the precious metal has dominated the Western Australian town of 30,000 ever since. Ashok Parekh is the local accountant and chairman of mid-tier gold producer Horizon Minerals.
I've been involved in the mining industry for over 40 years in Kalgoorlie, and I happen to own a pub as well. When I came here, gold was probably $150 an ounce. Today it's over $5,000 an ounce. It has been great for everybody in Australia, and Kalgoorlie, we're the biggest gold mining town I think in Australia. And Kalgoorlie is different. You can come to Kalgoorlie, you can walk into a pub, you got no job, nowhere to live, and no money. And by the time you walk out, you've had a meal, you've got a place to stay, and you've got a job.
And there's plenty more people finding jobs and places to mine, with the price of gold booming.
We're currently mining this ore in a great gold price environment. What these high gold prices do for us is we can actually produce gold now, pay a little more through processing through third-party infrastructure, so use other people's infrastructure. But what it does is it actually closes that funding gap we'll need to refurbish our own plants.
You know, I call them pop-up shops around the goldfields here, just the amount of flurry and activity of things that weren't economic 6 months ago that suddenly become economic.
Australia produces about 300 tonnes of gold each year. That's about 8% of global production. It's a costly exercise. The process involves breaking down vast amounts of ore extracted from the mine. Each truck can carry about 250 tonnes of material, but just typically 500 grams of that is gold. That material's then broken down and processed by crushers before being melted.
So the melting point of gold is 1,024 degrees. So we then heat the furnace up to roughly 1,200 degrees. As we go through the pour process, the first material comes out is all of that slag off the top of the crucible. Then when the gold comes out, the colour change actually goes from a yellow almost to a greeny colour, and that's the gold coming out of the process. Probably one of the good things about this site is that we have a relatively nice ore body coming into it. We don't have a great deal of impurities coming through, so these are some of the nicest bars that I've seen in my time in industry.
And with a surge in prices, Australia's gold miners are cashing in and setting themselves up for long-term success. Laurie Conway is CEO of Evolution Mining.
So back in June 23, we made the decision to invest $250 million building this plant expansion and $75 million to open up a new mining centre into the north here to feed the plant, taking it from 2 million tonnes to 4.2 million tonnes. And in 23, it was pretty difficult. The market was hot, it was hard to get people, hard to get equipment. I think we were very fortunate when we did that, but you know, gold price was only $2,400, $2,500 an ounce when the board approved this. and it had very good economics. I mean, bringing it in right now at $5,200 an ounce is a perfect time to be commissioning it. I think that the difference this time is what's going on around central banks and that shift of we need to have gold in our reserves a lot more, whereas back in the last cycle it was really around the whole mining boom and therefore what was going on in low inflation, low interest rates that pushed the price of gold up, and so that was more being driven by an economic standpoint. This time it's really being driven by geopolitical tensions and the shift in the way that governments are handling their reserves, and so that's why you sort of see that structural shift that the governments are driving this price, whereas the economy was driving the other one. And that's why, you know, in the long term, yes, the gold price will come down a bit, but it's structurally shifted higher because of what central banks are doing versus the last boom.
In 2019, Evolution reported adjusted gross profit of about $270 million US, or about 410 million Australian dollars. That now jumped to about $1 billion. It's expected to grow even further to almost $2 billion next year.
And how about on the costs front? What's that like at the moment?
Power will go up because we're obviously doubling the processing, and the processing uses power. 50% of our costs are labour.
And investors are keeping a keen eye on costs this time around. When gold prices last jumped, Australia's gold miners underperformed, falling 16% in the 3 years from 2010, while the price of the metal itself rose 52%. Kate McCutcheon covers Australia's gold miners for Citi.
So last cycle, we definitely saw a lot of transformative M&A, which was very value destructive. So that last cycle from 2000 to 2012, the 10 biggest gold stocks in our coverage universe cumulatively burnt $10 billion in free cash.
As an industry, we made those missteps because when the price did come off and that cycle changed, shareholders went, well, where's the cash? And all the industry said is, well, we reinvested it into projects, or we went and bought assets, and therefore we've reinvested that money for you. And the shareholders were like, well, we would have liked some of that, and we didn't see that. It hasn't changed too much, I mean, other than that we're putting more cash in the bank, which is what our shareholders want to see.
So it's interesting you say you've got more cash in the bank. Has this changed your approach to reserve management and long-term planning as well?
You know, you've got to see it as a sustained price at these levels before, because you can't just change your mine plans overnight. So what it does mean, we look at our reserve pricing, we look at what the costs have changed, because you do see costs generally follow the gold price. And then we look at, well, what projects become more economic in a higher price environment, and then we apply the normal discipline of when do you bring those on.
Look, I think it's important that you look at a lot of these things in hindsight. Some things like hedging, you know, hedge book legacy at prices that people had never thought that they would, you know, see exposure to. You know, when people had a high equity price, they probably tried to use that currency by raising lots of money on the back of an elevated equity price, and then potentially dropping money out of their balance sheet, returned capital to shareholders that then wasn't retained for its own sustainability inside the business. So there are very many different disciplines of what people do at different times.
And do you feel lessons have been learned? Do you feel like the approach is different this time?
I feel that the heat has come out of some of that, but I've found a foundation discipline of true capital management across a variety of things. So, you know, dividend paying gold companies was never really heard of. There's a lot of good track record of gold companies paying dividends, doing share buybacks, compressing registers that they had raised equity on the back of. Those are the type of capital management measures that aren't typical to a gold company.
This time, investors want to see more tuck-in acquisitions or bolt-on acquisitions close to infrastructure. It's very, very hard in a bull gold market to do a deal that's accretive, and I think the gold companies are realising that. Secondly, what's not different this time is delivery on operational guidance. So the three biggest stocks in our coverage universe, Evolution, Northern Star and Newmont, actually up until this FY hadn't delivered on guidance for between 4 to 7 years. The third thing that's different this cycle is also hedge books. So now we're seeing gold miners opt for no hedging policy, so that exposure to spot prices, and putting in place some put options to protect the downside. And this cycle as well, most of the gold miners in our coverage are in a net cash position or running at peak net debt of 15%. So balance sheets are very different this time.
And investors appear to be liking what they're seeing. Since the start of 2022, the gold price is up 85%, Australia's gold miners are up 98%, with both Northern Star and Evolution balancing share buyback programs with new investments in recent months.
Do you feel like investors now buy the idea that the gold industry is more disciplined than it has been in the past?
Yeah, I think if we can continue that over the next sort of 12, 18 months through, increasing dividends, making sure that, some companies do buybacks, that they do see that, as well as reinvesting in the business, because the shareholders still want us to reinvest in the business. They want us to make it sustainable over the long term, but they do want to share in that as we're going through this cycle. Just spent a couple of weeks in the US meeting with investors because there's a lot more interest in the US in Australian gold stocks at the moment, and so it was good to go and talk to them and explain what we're doing here at Evolution, but also what the gold industry in Australia is doing, and there's certainly going to be more interest.
The big question is, where to next? Gold has plateaued in recent months, but in an increasingly uncertain macro environment, is there room to go higher?
It's a really exciting time for gold, and it's been elevated for some time, but there doesn't seem any signs that this is going to fall back. We think it's possibly the new norm, and if anything, the start of another continuing bull run for gold.
Yeah, certainly. I mean, gold started back in the 1850s, so it's been around and been a part of Australia for a very long time. And I think, as we go through the boom and bust of economies, gold has had a significant role to play. It now has a more important role to play because we are a top 10 producer, we're a low-cost producer, we're a great jurisdiction in which to operate, and therefore it makes it important to the Australian economy, but it also means it makes it attractive for people to invest in the sector.
Whether it does make it attractive for people to invest in is going to depend on some big decisions being made by companies like Evolution and Northern Star. Is it time to double down on the gold mining bet, or is it time to take some money off the table and give it back to investors?